Hi, good afternoon, and welcome to another edition of Business and Banking Dialogue. My name is KK, and I'm the host for this show. I welcome all participants on EPS channel, Twitter, LinkedIn, YouTube, and Facebook. We've been bringing this online show to you on a day-to-day basis. I hope you have been finding it informative. I think so because there are a lot more participants now than when we started. So we will talk today on the topic of banking license and ownership. Is it time for a drastic change? So, ladies and gentlemen, as per the economic survey of 2019-20, India will need much bigger banks to become a 5 trillion economy. Our Prime Minister has been talking about the 5 trillion economy. In particular, at least 8 banks are needed, which are large enough to belong to the world's top 100 banks. Unfortunately, as of today, the biggest bank, that is State Bank of India, is ranked the 55th. So we have a long way to go. In the 55th, in the world's top 100 bank. Therefore, the subject of banking license, its application, ownership, reforms comes into play. If we have to the 5 trillion, then what do we do about the licenses? So our topic of discussion is bank licensing and ownership norms. Is it time for a drastic change? With Mr. R. Gandhi, who's very popularly known to everyone. He's the ex-deputy governor of RBI. Good afternoon, sir, and welcome to the show.
Good afternoon, KK.
Thank you. Sir, we are reaching a milestone in the next week. We will be actually, like they say, time flies. We are actually reaching the 50th episode of Banking and Business Dialogue. So could you just tell us your thoughts on this online show that we have on a day-to-day basis?
First of all, my congratulations to you, EPSL, and all of you, and to you in particular, because who have been the moderator for all these shows. Yes, in these times of COVID-related situation, an intellectual thinking periodically is definitely in order. Not just periodically, you have actually made it as a daily affair. So that keeps everybody, at least temporarily for during this period of time, to move away from the concerns and the difficulties of COVID and exercise your mind intellectually. That has been a very, very helpful feature of this program. I wish that this program continues even after 50th episode also, and the days to come. It becomes one of the prime channel of communicating thoughts across all the stakeholders. Thank you.
Thank you, sir. Thank you for your kind words. That's indeed encouraging for us. We will try to bring this as much as possible and deliver good quality. So, the Indian bank, experts suggest that we need a liberal ownership regime to facilitate the ownership of large private and foreign capital. That type on licenses, this was announced in 2013 by the RBI policy that we should have a tap banking license, which is a path-breaking, policy. 2 universal banks, 10 small finance banks, and 8 payment banks were given licenses. Has on-tap banking license met its objective and expectations?
Okay. Yes, Bank, we have over the period of more than 50 years since nationalization, have come a long way in terms of our thinking on the ownership of banks and the number of banks. There has been several occasions at which the expert committees formed by the Reserve Bank of India, like National Committee number 1, National Committee number 2, then thereafter Tarapur Committee, Dr. Rajan's committee, like that, and Dr. Moore's committee. So several committees have periodically had a occasion to relook at the then existing regulatory provisions relating to licensing, and they had come out with certain suggestions which have been adopted by the Reserve Bank over this period. There are certain suggestions which are still to be materialized. right from Dr. Narasimhan Committee report number 1, when it had visualized that India should be having a 4-tiered banking system. At the top level, international banks, internationally operatable, sizable banks should be there, 4 to 5, and then national level banks, then regional banks, etc. So that is a structure which we have been dreaming about. So once in a while, certain openings have been done. And at one point in time, because earlier the opening for licenses were always through a short period. The window was open for a short period only, wherein during which the applications were received by the Reserve Bank of India and accordingly dealt with by And afterwards, there has been a suggestion that this window should be available at any point in time. And accordingly, in 2016, the Reserve Bank came out with guidelines for keeping the licensing of universal bank on tap. But after that, now that it is 3 years plus or 4 years now, during this period, hardly very few applications came to Reserve Bank of India, which were worthwhile to be considered by the Reserve Bank to accord licenses. So that way, the on-tap licenses, even though it had come out with that policy, but in practice, so far, nothing seriously has materialized.
Okay. So we still have the tap on the banking license on tap. We still have to see that a lot many more players can come in. So one of the factors perhaps is that while the on tap licenses were initially announced and large corporates did apply for it, then there was a change in heart, and they said, they excluded the large corporate. So, some portion of them, they kind of dropped that application. So what's your view, sir?
Yes, that's an issue. The guidelines which have come for on-tap licensing, whether it has been open enough for serious intending entities to be coming forward to form bank. That is what's the question. And because in these 4 years, as I said, that no serious application has come in. So obviously, Reserve Bank thought it fit to have a complete wholesome relook on the set of guidelines. And in addition to licensing guidelines, other related issues of ownership, promoter, etc. And it has come out with just this month on 12th. Reserve Bank has come out with the constitution of an internal working group headed by the members, 2 members of the Reserve Bank board, to have a wholesome review. Obviously, because the current guidelines is not enough. Because if it is enough, then reasonably, if it is kind of open, then at this point in time, in these 3-4 years, we should have got some good number of licenses coming, at least applications coming through. That has not happened. That would mean that it is now time for having a hard relook on the set of parameters, the eligibility conditions, and other regulatory provision structure that has been built on. Certainly, it is time for review.
Okay. So if you, what are your thoughts on revisiting the eligibility criteria for banking license such that we have many more banks and bigger banks?
One thing which has come out very clearly by some 10-15 years before post Basel III indications, that banks anywhere in the world and also in India will have to be continuously it should be able to increase its capital. That would mean that the banks will have to have sizable investor interest. Serious stakeholders should be there to provide for adequate capital, not just for meeting with the regulatory requirement, but also for growth in the economy. And India being a high growth economy and also has further aspirations to grow in a much bigger way, as you mentioned, 5 trillion economy or 10 trillion economy, whatever. So that would mean that our banks will also be required to be adequately capitalized, not just now and every year in the coming year also. So that would mean that seriously deep-pocketed investors should be allowed to have a clear and easy access to be the owners of the bank. That will have to be there, because widely held, the concept of widely held public institutions like a bank, that we have to necessarily had a hard relook. This was a revelation several years before within Reserve Bank of India. Slowly, it had been changing its position relating to eligibility. At that point in time, 2013-16, when we had internally been discussing, the position was who had kind of large capital resources available to be ready to be invested in banks. First, it is the government. Government already owned several banks, and even for those participator banks, government had been continuously finding it increasingly difficult to be pumping more and more capital. So there is a limitation on the participator banks to be continuously be expecting further capital from the government. That is the number one. Second, the serious group who can put additional capital into the banks, they're all public financial institutions. And at the start of the reforms program in 1991, we had several public financial institutions which had themselves, either they promoted a bank or they themselves have converted into a bank already. There is no more public financial institution who has the capacity to become a bank except one or two, like IFCI or LIC, kind of. These are the 2-3 institutions who are right now available, who can think about promoting a bank or converting themselves into a bank. Beyond that, that group has also the opportunities have kind of fully exhausted. Third group, they relates to the individuals who will be professionals who will be able to attract capital on their professional capacity, experience, and expertise. That also, once or twice, we have given licenses on that basis. Some have been successful, some have not been successful. So there is a limited scope for that particular set of people to be promoting a bank. The fourth group, that relates to industrial houses, and fifth group is the foreign. These are the two. So in 2013, that was a serious discussion among these two. Beyond these two, who else will be? It will be possible to promote a bank or convert into a bank. At 2016, the idea was that let us make it relatively easier for NBFCs, because for NBFCs, it is a natural progression from a limited financial institution like a non-banking financial institution into a full-fledged bank. So that is one opportunity what was thought about. The other opportunity what was thought about is that urban cooperative banks, and they also can have visions to become a full-fledged bank. Or the differentiated banks, which at that time kind of we had issued licenses. Down the line, even they can also aspire to become universal bank. Those were that was the situation. And beyond which, the two groups, one is the foreign, the other is the industrial house. As regards foreign, yes, the Reserve Bank has come out with the guidelines for 100% wholly owned subsidiary of a foreign bank that had been opened up. And as an individual foreign entities, that the ownership structure has been relaxed to the extent that up to 74% in a private bank today, the foreign ownership can be there. So that part has also been almost kind of exhausted. So the fifth one, which is yet to be fully looked into, is the industrial and business houses. There again, at that particular time, because of the long experience of nationalization objectives, the hesitancy about letting this particular segment of the community economy to be owning banks, there were a lot of hesitation. That's why, if you recall, the 2013 policy had explicitly prohibited them from opening a bank or owning a bank. And in 2016, a subtle change was definitely made in the universal bank on-tap licensing policy. There is an opening given for small industrial and business houses. That is the houses or the groups which have the total assets of that group if it is less than 5,000 crore, and then they will be able to promote a bank. But if they are having above 5,000 crore, then 40% of their assets and income should not have been, more than 40% should not have been from non-financial activity. To that extent, certain opening was given, but obviously that is not enough, looks like. That is where today the question is, can we further modify this requirement? There has been hesitation, not just in India, world over also. Very many economies do not easily give business houses to own a bank beyond a certain limit. So that hesitation is very strongly deep-rooted in very many economies, as I mentioned, and India also has that tradition. So to come out of that, we will need several ring fencing in the sense that what's the kind of arm's length relationship industrial house or business house can have vis-a-vis a bank it will be owning or promoting, and what kind of economic interest it may have in the bank, but not a controlling influence. So those kind of ring fencing, if we are able to build up a structure, then we may not necessarily have hesitation for industrial or business houses to be owning a bank.
Okay. Yeah. So you are saying that this sector, industrial and big houses, we still have some play out there, but there has to be some checks and balances to be mentioned, which is what you mentioned. But what is the problem of getting the large corporate to set up banks? Is there a conflict of interest that we see there?
Yeah, the primary problem that we had, not just it is theoretical, we had seen it before nationalization, that when the industrial house owns up a bank, then there are quite a lot of conflict of interest, diversion of funds, easy influencing the credit decisions of the bank based on the interest of the group rather than the depositors' interest. All these kind of problems we had seen in those period. So that is not easily forgettable. And that is where when we are ready to open, if you are ready to open the banking licenses for the industrial houses, there will have to be several assurances, as I said, ring fences, through which their interest in the bank should be limited to economic and investment interest rather than a controlling, influencing, decision-making interest.
Right.
So that can be done through several methods, like it could be non-voting shares, wherein they can invest, or their voting shares can be limited, their positions in the boards can be limited, independent directors' their powers can be enhanced. So very many methods through which such kind of ring fencing will be possible.
Yeah, but we already have banks and their security assets arm, which are banks have that, and there is a clear wall that has been created, and that's kind of functioning well, right? So we already have something which RBI has experimented and seen.
That's no, not with reference to banking, because the securities market and other insurance, and I think that's a completely different issue. Whereas in the banks, the funds of the depositors come into the picture. So that is where the ring fencing is really, really difficult. Yes, one particular opening had been done. One is with reference to payment banks, because in the payment banks, absolutely, there is no credit decision. There is no credit portfolio for them. So there, obviously, all of us know that there is an industrial house which owns a sizable controlling interest in payment bank. But other than that, there has been no instances as of now.
Okay. So could you, since we are at the large corporates, we had instances of two large corporates, Kotak and Hindujas, yeah, and they had problems. The RBI wanted to, in one case, to reduce, and in another case, there was an opportunity to increase. So what is your take on reducing this excessive concentration of ownership and control in Indian private sector bank?
This is a question directly opposite to the first question. Because the first
Okay.
question where we had dealt with is that how is that we can allow large stake in a
Correct.
bank, right? So that is the one
Yes.
question. Now the question is that large stake means up to what?
Yeah.
That's a corresponding question. And again, based on the experience that we had in the recent past, this is a hot subject as of now. Over the period, as I said, that Reserve Bank had been relooking at the up to what extent the ownership can be allowed for the promoters or for even non-promoters also. So for long, it held the view that a widely held structure is the best for the banking industry. That's why it had put a structure in the sense that up to 5% anyone can buy it from the market. Between 5 and 10, they will have to take the Reserve Bank's prior approval, and there's a hard stop at 10. Beyond 10, Reserve Bank had not been permitting any large holding in a bank for a very long period. But well, once the Reserve Bank started giving licenses in 1990s and earlier in the early 2002s and 2010s, at that time, because when we start a new bank, when a new bank license is given, obviously there has to be a serious stake to the promoting group. So at that particular time, Reserve Bank was ready to offer them the higher stake, but it had expected and it had given in as a part of the guidelines or licensing conditions or later as a regulation, it had indicated that over a period of time, the stakeholder, the promoting group's shareholding will have to be brought down to ultimately to 15. That was the situation until 2016. In 2016, we had a very serious relook on that, and because that's a time we had seen that the need for continuous additional capital to be pumped in banks because of the Basel III requirements and growing economy, and also because of the then situation about a large scale asset quality issues, and to shore up that quality to make adequate provisions also you required larger capital, and there are certain distressed banks at that particular point in time who have to be restored. And so keeping all that into consideration, Reserve Bank came out with revised ownership structure in 2016. It said that based on the quality of the entity, different levels of ownership will be possible. For individuals, up to 10%, for unregulated group, up to 15%. If it's a regulated entity, then up to 30%. And in the case of a distressed bank, even past 30% sizable holding could be permitted. And even for non-distressed bank, based on strategic interest, even higher share capital could be allowed to be held to begin with. And over finally, over the period, that was supposed to be brought down to reasonable levels. So that means that in 2016, even though for about 10-15 years, the entities could be holding higher stake, but ultimately they have to be looking at a position that they need to be brought down to 15%. That was now the question has come up based on the recent experiences of Kotak Bank, as you mentioned, Kotak Bank and other bank, whether this 15% is a reasonable upper limit for a serious stake interest like a promoting group, or can we be by relaxing that condition? On that basis, just now, as I last 2-3 months before, Reserve Bank had permitted Kotak Bank to own 26% on a long-term basis. But correspondingly, voting rights have been restricted to 15% only, but this economic interest have been permitted up to 26%. So now this committee, this internal working group, which look at, could make further deliberations on this particular proposition and make appropriate changes. In my view, obviously, it's such a serious stake as 26% for a promoter or a strategic interest will certainly be good for the long-term interest of the bank and banking industry. That's my opinion.
Okay, that's good, sir. So you're suggesting that a higher stake is good for the banks, and So that's your suggestion and your view. Great, sir. So ladies and gentlemen, this is a very interesting topic on banking licenses, and is it the right? Is it? I mean, it's time for us to make some changes. If you were to keep at the 5 trillion economy that we have in mind, or at least the government of India has put that as a target in front of the country, that we must reach there. And banks and banking reforms are extremely important in that direction. So while I continue to have discussion with Sir Gandhi, I would request you to put your questions in the Q&A box, and so that those questions can be asked to Mr. Gandhi. Would you like to talk to him directly? You can put up raise your hand, and we will find a way to ensure that you're able to ask your question directly. We are almost on the half-hour stage of this discussion, so we have another half an hour to go. So please put in your questions at the earliest so that I don't miss any questions. So let's continue our discussion until we I'm sure there will be a lot of questions that will come through from the participants. So we talked about this conflict of interest that corporates. There is no doubt that corporates have to be given licenses, so that if you have to create some big banks, corporates have to come. Large corporates, foreign entities have to come. But yet, do you feel that we look at corporates suspiciously? I mean, do we get that feeling that, and in that kind of environment, will corporates want to come in?
Yeah, when you have several interests, where you're an investor and you have wide-ranging business interests in very many segments, and you have, let us say, you have interest in banks also. In that situation, it is very easy for you to succumb to the pressure of the financial needs of your other non-financial activity, and access to the bank that you own. It becomes natural to expect. So that is where the inter-corporate relationship, if you are all your entities are non-banking entities, in that case, there are clear regulations available up to which inter-corporate interest can be there, and with a kind of disclosure relating to related entities transactions and other conditions, where you should be able to manage the ring fencing or to keep a distance at each business at arm's length. It may be relatively easier. But when you own a bank, the problem is totally different, because the bank has access to public deposits, and the public deposits, it has to be returnable to the public on as and when it matures, or as on demand, based on the condition. That would mean that all of these monies will have to be invested in a high assurance basis that the monies will be returnable, will be realizable by the bank as and when the assets mature, or based on the required cash flows agreed on. So that is a position. So that set of condition, if you are a very serious stakeholder in the bank, it is easy for you to influence the management of the bank to make adjustment, or to ignore conditions and be soft on your requirements. That is the primary problem with reference to a bank being owned by industrial houses or such large stake. It is not just industrial houses, any individuals owning very large stake also, the approach is like that only. I mean, the natural doubt comes about your capacity to influence the thoughts. So that is where the arm's length relationship requires very robust structure in a banking industry.
Right, sir. So give us a perspective of how is it then abroad? I mean, are we saying that even abroad, because we are not there in the top 100 excepting one bank, and So are we saying even abroad it's like this? There are no large corporates who have set it up. So how are they having such large banks?
That is completely a different question. A very big international bank does not emerge just by amassing a large capital. Large capital is one of the requirements of being a very large bank. Let us be clear about that, because the bank will have to have the proper structure in terms of its business plans and its track record and the way its financials are being managed. So that will lead that to an internationally large-sized bank, not just only because you have gathered a large capital. So large capital may be the starting point. Yeah. That's right. But it will have to be built brick by brick for a bank to become internationally active and very successful large bank. So it takes several years to reach that kind of situation. But the starting point obviously is the capital or ready availability of capital down the line also. So that is where the importance of capital comes in. And it is not a ready guarantee or that the moment you have large capital, you become an internationally active bank.
So just a question to you, sir, on the same lines, since we are so much worried about the conflict of interest of corporates, and so we have got licenses given to various banks with the idea that everything will be controlled, the customers' money is safe, etc. Yet we have banks that have gone down, right? We have a classic case of PMC Cooperative Bank that has gone down. Yes Bank is still stuttering. Yet, so, despite all that, we still have problems.
True, because it is not that just one solution we have for a bank to be fully successful or being above board. So we have to be vigilant about very many aspects. Corporate governance is in one issue. It is not just a serious stakeholder alone will be a problem. Even though you are not a serious stakeholder, as you mentioned about the cooperative banks, everybody has single vote, single share, single vote kind of situation. There, some other problems, the corporate governance problem have come into the fore. So, and in some other cases, whether it's public sector or private sector, credit decisions have become an issue. So the problem can occur due to several other reasons. It is not just the ownership alone which creates the problem or likely to create a problem. Maybe it can be the way the bank is run, the way the bank is governed, or even the employees, how they behave. Everything gets into the picture. So that way, it is not the argument that by bringing in more capital, we'll be able to completely safeguard the interest of a bank or ensure the bank runs in a proper way. That is not. That several other measures will also be equally needed and continuously needed.
Thank you, sir. Thank you. So, ladies and gentlemen, please put in your questions. I'm still waiting for, we are in discussion with Mr. Gandhi, ex-Deputy Governor of RBI. Sir, there is a first question that's coming to you directly. As you said, there are two ways questions can come. Either they put it in the chat box, or they ask you directly. So we have Mr. Prabhu who wants to ask a question directly to you. Prabhu, could you please unmute and ask the question?
Sure. Yeah, good afternoon, sir. Can you hear me? Yeah, so the foundation of any bank is capital, deep pockets, governance, technology, operations, and competent professionals at the end of the day. So why wouldn't the right set of professionals with the appropriate skill sets in the current context with credit, treasury, technology, payments, and other products, if backed by professional pools of capital, will essentially meet all of RBI's concerns from a new bank license perspective, including addressing the most critical one, which is of no conflicts of interest, and also the technology deployment on a very, very lean stack, as they say. And so were there such a possibility, Would
Yeah.
RBI look at also turning around weaker banks like, let's say, a PMC to such people?
Yes,
Mind you, backed by proper capital. Yeah.
the current policy provides for such professionals to come into the picture, and they can certainly come together and promote a bank. So the professionals with a 10 years background, if they will be able to demonstrate that they are able to attract necessary capital, then they can certainly promote a bank. As I said, that even in 2002 and even in 2009, 1991 also, there were professionals who promoted the banks. So that likewise today also that window is certainly open. Professionals can come forward, join together, and can canvas for adequate capital. The minimum capital required is for a universal bank is today it is 500 crore. They can certainly put forth their proposal, and I'm sure that Reserve Bank will certainly be looking at it.
So one more follow-on question, if you don't mind. I mean, what about the the governance issue of cooperative banks, where there was a board of governance which was supposed to become, and it's not gone anywhere? What's your view, sir? I mean, because that's the single biggest problem there.
Yeah, so cooperative banks, the situation is totally different in the sense that Reserve Bank does not have the complete regulatory and supervisory authority over the cooperative banks. So that is where the structure, even today, we have not yet found an answer. Even day before yesterday, when the government has issued the ordinance to bring the certain aspects of the cooperative banks under the jurisdiction of the Reserve Bank of India, it had to carefully word it in the sense that it is the central, that a multi-state cooperative banks, Reserve Bank has a kind of absolute power, whereas with respect to those cooperative banks and who are governed under the respective state governments, the Reserve Bank will have to do things in consultation with the respective state government. So that legal structure is still continuing. So that is why the board of management or board of governance for the cooperative banks, Reserve Bank, even though it had given kind of instruction for banks which are above a threshold, such a structure should be there, then these kind of impediments still are there to cross.
Thank you very much, sir.
Thank you, Harish, for a good question. So let's talk about consolidation or licenses. I mean, we are going with this that we need to give many more licenses. Should be easy to get, should be for everyone who are eligible to get, which is a good thought. But if you look at the licenses that we have, so the Indian banking sector is highly fragmented, as you know, sir. PSU, there are some close to 12 banks, assuming that all are merged, as per the government's this thing. There some are on the way to merge. Private sector, there are about 22 banks. UCP, there are 1,544 banks. Rural cooperatives as high as 96,000 odd. Then you have state, district, primary cooperatives. A study shows that in Asia, India is the most fragmented, followed by Taiwan, whereas Singapore and Australia are highly consolidated. So in this state, is consolidation the need of the hour or licenses the need of the hour?
See, consolidation requires several, consolidation to be successful. You need to be a small economy in terms of geography. For a large country like India, widespread throughout and very many states to be organized that way, it is very difficult to have only large banks in the country and have branches and other kind of reaches throughout the country. That will not be suitable at all. That is why consistently several working groups and committees have come to the conclusion that we need to be having large banks also and small banks also, small local banks also. So because certain segments of the economy, certain population of the economy will not be able to be served by very large entities, because large entities by definition will have to focus on sophisticated high-end banking and financial services, whereas at the very low end, you require local content, local approach, and very easy access for that low population, low end of the population to be availing the banking services. So that way, it has been a very strong belief in our country that we should be having several types of banking institutions, not just simply aggregating all banks into we have very few small number of big banks. That is not likely to be actually be delivering or meeting our broader objectives. That is true, because that is why we will continue to be having large banks also and large number of small banks also. So local feel, local touch, local service, local orientation, and allowing more entrepreneur opportunities for local entrepreneurs. If you keep all those things in view, then the small cooperative banks or very small banks in concentrated in a particular jurisdiction may have to be continued with. That is where consolidation, if you are talking about consolidation of cooperative banks into larger cooperative banks, as one type of consolidation we did with reference to public sector banks, another type of consolidation we have done with reference to regional rural banks. At one point in time, we had about 198 RRBs. Now the RRBs have been consolidated into state-wise in each state. It is now one like that we have done. The same structure, if you are thinking that the cooperative banks also should be federated or be merged into a single entity, that may not necessarily be the right solution, in my opinion.
Okay, fair enough, sir. That's this thing. We have another participant who would want to ask you a direct question. Mr. Tripathi, could you please unmute yourself and ask the question?
Good afternoon, sir. This is Krishan Tripathi from ETV Bharat. Sir, I wanted to ask a follow-up question on this RBI ordinance. Do you think keeping these primary agricultural credit societies out of this thing, and as you rightly said, state cooperative banks, will it not defeat the purpose? Second question, I also want to ask you whether there is any other category of credit societies that can be used for committing this kind of fraud, like Sharda scam, and in case of Sahara, how they are registered, whether we will be able to check them with this ordinance, or whether we need to further strengthen this thing.
See, cooperative structure in our country had started from more than 100 years before. Actually, they precede even commercial banking in the country. So cooperative credit societies and all. So that way, the objective of creating a cooperative structure, not just for the financial sector and even for other real sectors also, it had much broader political economic objectives. And that is why today, for cooperative structure, assurances have been given even at the constitution level, not just the cooperative act, the cooperative movement, the structure of cooperatives, they have been enshrined even in the constitution. So that is the consensus, political consensus in the country. So that we may not be able to change that position so quickly, and saying that the cooperative structure for the financial side or the banking side may not be the right structure. That we cannot, because we always felt that regulation should be ownership neutral. What does it mean? That means that the financial institution like a bank, it can be owned by individuals, it can be owned by commerce, it can be owned by government, it can be owned by foreign, it can be owned by cooperative. So irrespective of the ownership structure of a bank, we should be able to regulate the bank and supervise the banks properly. So that is what is the structure. So that would mean that we should not be opposing any particular way of owning a bank. We can have different conditions of ownership depending upon the structure. That will be permissible. That can certainly be there. And based on the experience, the past experience of a particular structure, failings or success, based on that, the tightening of that regulation or loosening of the regulation will always be good. That's all right. But and your question, whether the agricultural credit societies, the number that, because there the very objective is that every village, because India is an agrarian economy in terms of number of people depending upon the economy rather than the economy as a whole. Today, agriculture sector provides less than 20% of our, so now 18 or 17% only of the GDP is coming from agriculture. That doesn't mean that the number of people depending upon agriculture is also 17 or 18%. No, that is a large segment. So to support them that way, locally, a kind of democratic structure that has been arrived at through the cooperative mechanism, that may not be easy to dismantle that. That requires a completely different political consensus for reaching that kind of position. That's why I won't go for the argument that agricultural credit societies should be converted into something else. That is not the way to go about. So they do serve the particular objectives. Yes, that monitoring, supervising over them will have to be tightened. Governance will have to be brought in a better way. The political influence may have to be reduced. For that, what kind of ring fencing we have to do, that we should work about, but should allow the cooperative structure to be in position. Now, there are several countries, especially Europe, where the cooperative structure has been phenomenally successful.
Sir, I have a follow-up question on economy. If you remember, sir, some time back in this program itself, you talked about that India's economic recovery will be distinctively different from the rest of the world. Now we see the cases are rising everywhere, not only in India, but in America also. And some people say as long as medical science doesn't find an answer to this virus, the need for a strict lockdown in future. Monsoon may aggravate the problem, winter may further aggravate the problem. So how do you see after 3-4 months, after experience of 3 months, whether as long as this challenge is there?
Mr. Tripathi, I was hoping that this today's discussion to be completely forgetting about Corona, and you are reminding that again, because I chose this topic because otherwise almost during in this channel continuously we have been talking about how to deal with Corona related problems. That's why I thought that I had chosen a topic where Corona will not be discussing, but you are bringing back to that issue. Anyway, the scientific developments which will come ultimately should come for dealing with Corona. That's a completely different issue. But in the short while, as we face the more and more of cases coming up, that is one issue. It's a hard trade-off between dealing with Corona and dealing with the livelihood of people. It is a hard choice. So any decision maker will definitely can be easily faulted if we are decided this way or that way. That criticism will always be there. So in the best interest of the economy, in the best interest of the people's health, authorities will certainly, I would hope that they will take the right decision. We should accept that rather than when they take a decision in favor of livelihood, you take a position in favor of health of the people, or when they take decision in favor of ensuring health at the cost of economy, then we criticize. That is not the way to go about, because there is no clear singular solution for today's situation.
Yes, sir. Thank you, sir. Thank you, Mr. Tripathi, for your questions. So I have another question on from Mr. Samamurthy. Welcome, sir. Mr. Samamurthy asked you his question. What is your view on digital-only banks?
Yeah, right. So that certainly, because when we want to have different type of banks to be on the scene, catering to different segments of the population and the segments of the economy, there will be one of the structure that we should be considering is the digital-only banks. Because digital-only banks give a very easy access to banking services, irrespective of the place at which a person is situated, irrespective of the time at which he or she would want the financial services to be available to him or her. So that is a capacity of the digital only bank. Whereas brick and mortar banks have another set of, they can meet another set of requirements of the customer, because customer would always want, because not anything and everything is standardizable, because digital only banks require standardized financial services, banking services. Whereas for many people, not just only for business or commerce or industries, even individuals also, the solutions may have to be specific to the person. In that case, the financial solution that they require will be needing to have discussions with the banking personnel. In that case, there will be brick and mortar definitely serves them much better than digital only bank. Being a large economy, having different sizes of segments of the population, different levels of literacy, both the academic literacy and digital literacy. So you would need variety of banks to be on the scene, and the digital only banks, if they can cater to one particular segment, we should welcome that and we should allow that to happen. And Reserve Bank, I think, had already permitted the DBS to have that kind of structure. Further banks also, if they would bring up that kind of application, I would think that Reserve Bank will be willing to give a license to them.
Right, sir. Thank you. So talking on the digital bank, we had the Narasimhan report, committee report said about abolition of branch licenses. And that's something. Is that implemented, or I mean, we still have licenses, right, going?
Today, yes, licenses, because the BR Act specifically has a provision for licenses, branch licenses. So licensing continues, but Reserve Bank has completely expanded the definition of a branch. Now it is called touch points. So touch points, the banks have been given enough freedom to determine the number of locations from where they will be offering the services, whether it's the brick and mortar branch service or the touch point service, whether it's a business correspondent, whether it is the ATM. So like that, in several ways, the definition of touch points have been redefined. So that's why the old restrictive licensing policy no longer applies for a bank today. That's number one. Number two, even like a payment bank, Paytm Bank, if I remember that, it has got just 2 branches. That's it. That's a physical branch. But the number of touch point it has, it is in thousands. Fino Bank also, the physical branch number is maybe very less, but the touch points are thousands, or even they have crossed even lakh, I think. So that way, that the service rendering points, that has completely, the definition has been completely been eased, and I don't think branch licensing, the restrictive position, no longer holds good.
Okay. Right, sir. So, ladies and gentlemen, please, we are almost coming to the last 10 minutes or so, or less than that. So please send in your queries. I would like to take it across to Mr. Gandhi. So let's talk about the holding of financial subsidiaries through non-cooperative financial holding company. So what changes would you like to recommend on regulations on holding of financial subsidiaries through non-operative financial holding company? How do we bring all the banks under a uniform regulation?
Yeah, this is another issue that needs to be settled, because when a bank promotes subsidiaries down the line for different types of financial services, there is always a moral obligation on the part of the bank for anything which is happening to its subsidiaries. It should be providing the financial and other support. That's an expectation. To manage that expectation only, because we would like to definitely ring fence the funds of the bank, that is primarily the public deposit, from being encroached upon or called upon to pay for the problems of the subsidiaries of the bank. That is where the structure that has been considered by several committees is that let there be a non-operative holding company under which a bank and other financial services entities should be held. A bank need not have a subsidiary, financial services subsidiary below it. That's a structure we wanted to bring in so that the bank's own funds are fully protected. They cannot be contaminated by the risk emanating from other financial services in the group. So that's a structure we wanted to create. But because of the legacy reasons, there are several banks who owned financial services subsidiaries today. If they have to be restructuring the way we want, then certain, as of today, the problem is primarily the tax structure. When a subsidiary becomes a parallel under a non-operative company, it has to be meeting with quite a bit of taxation related challenges. And that is the reason the banks have been hesitating to move towards that. That, in my opinion, if that kind of tax will have to be paid, because of that, it becomes a high cost initial structure, so be it. So that is better in the long term, and banks should move towards that kind of operating structure.
Right, sir. Thank you. So there's another query which has come, is actually questioning the RBI policy. It says, why has RBI permitted NBFCs, MFIs, and cooperative banks when PSBs already have strong network across, whereas they borrow money from PSBs and lend at higher rates? Do we need this model of financing?
Okay, so yes, that was the reason in, if you recall, in 2003 to 2006, the Reserve Bank had a little provisions in the sense that banks' exposure to NBFCs should be limited, and and it brought certain guidelines which the NBFCs and banks have to follow. The idea is that when the public keeps a deposit with the banks, then it should be used for its own lending and other banking related assets, rather than it gives loan to NBFC, which gives loans to the same set of borrowers at a higher cost. Whether this kind of tiered one is a right structure, that's what the question that has come up. In my opinion, it can still be allowed for the very simple reason that the certain type of risk a bank cannot take, but an NBFC can take. Yes. Both are legal economic activity. Given the liability structure of the banks, a bank may not be able to directly lend for such purposes, whereas it can lend to an entity like an NBFC who is specialized in taking that kind of risk. So that is why the bank funding to NBFC is not, need not necessarily be prohibited. It can still be there. That's my opinion. Because different structures have been brought on based on their risk modeling, risk appetite. So when an NBFC has a larger risk appetite as compared to a bank, an investor may not directly interested in putting his money in NBFC as a shareholding or its investment in its bonds and debentures, but he can certainly put it as a deposit in the bank, and bank will be able to assess the credit worthiness of the NBFC appropriately and lend money. A parallel example is the mutual fund, because and as an ordinary investor, we may not directly like to take the risk on a corporate exposure like share or debenture, whereas we can keep faith in the mutual fund who has the expertise to evaluate the appropriate investment in shares and debentures. So that's a structure, kind of structure. So that is why the bank funding of an NBFC is need not be necessarily considered as a bad, or it should be blocked or banned. I don't subscribe.
Right, sir. Thank you. So my final question to you is, almost at the close of our session. So the objective, very clearly from the Prime Minister and the government, is a 5 trillion economy. And for doing that, banks have to play a very, very important role. And there have to be some banks which are stand out really big, and to take on the lead. So in your opinion, sir, what are the 1 or 2 or 3 suggestions that you would offer to the RBI or to the government to take a concrete measure such that we are in a position to at least strive to reach that target?
Sorry. If you are targeting such large sized economy, 5 trillion economy, that would mean that very large projects will have to be funded. Capital will have to be found out for very large project, not just in the infrastructure project. Industrial projects will also be coming to the that definition. So that would mean that we have to be finding, as an extension, institutions which will be able to gather, collect that kind of capital and invest in these kind of institutions. That would mean that we may need wholesale banking. Reserve Bank actually did announce in 2016 that as an extension of the differentiated banking license, when it started with the payment bank and small finance bank, there was also to come another set of bank, the wholesale banks. That we have not continued that thought. I would think now that I would certainly urge that that particular line of thinking will have to be brought to a logical conclusion, and it will be good idea to have wholesale banks in the scene. So wholesale banks will be able to assess such large project funding and find appropriate source of funding those projects. Also help the economy that way. So that will be one recommendation I would like to make. If you have to think about 5 trillion economy, and which presupposes large spending on large projects, then we have to need a financing mechanism for such thing. Commercial banks cannot do that. We have seen that in the 2000s and 2010s, when the commercial banks wrongly went into that area and got their fingers burned. So we have to find and we cannot go back to the old structure of development financial institution. That is their days are dead. We should consider. Yeah. That would mean that we have to think about the structure of the wholesale bank. That will be my recommendation.
Right, sir. Thank you very much, sir. So we have, passed the hour, and just want to thank you very much for coming over, spending an hour with us. And we got very good views. We got some good questions also from the participants on the theme of bank licensing. Is there a need for a drastic change? Mr. Gandhi, sir, thank you very much for coming over, spending time with us. I look forward to have a dialogue with you on some other time, sir. Thank you very much.
Thank you. Thank you very much. Thank you, everybody. Good evening.
Thank you.